Hello and welcome to Trusts in Focus with me, David, from Kepler Trust Intelligence. Today I'll be looking more in depth at Schroder BSC Social Impact Trust plc, which has the ticker SBSI. The delegated fund manager of SBSI is Better Society Capital, or BSC, with Schroders acting as the alternative investment fund manager, providing investment and financial risk oversight as well as bringing its deep experience and expertise in running closed-end funds. The portfolio management team from BSC is headed by Chief Investment Officer Jeremy Rogers and Managing Director Hermina Popa. Jeremy has led BSC's investment work since 2013, helping to establish more than £3 billion of social impact investment vehicles. He previously founded and ran JP Morgan's High Yield Trading Group. Hermina has 20 years of experience in corporate finance and impact investing, having previously managed social and sustainable capital portfolio. The wider team is highly resourced with more than 30 dedicated investment professionals. BSC is solely focused on social impact investing, aiming to address the enormous social challenges facing the UK while aiming to generate positive financial returns. It was launched in 2012 by Sir Ronald Cohen, co-founder and former chairman of private equity firm Apax Partners. Schroder's team working on SBSI is led by Head of Impact Lynn Tomlinson, Global Head of Sustainability Andrew Howard, and Head of Impact for Private Equity at Schroders Capital Paul Lamacraft. SBSI provides financing to organisations delivering valuable social services to some of the most disadvantaged members of society in the UK. Its investment objectives are to deliver a measurable positive social impact for these people while providing shareholders with capital growth and a dividend. This breakdown of SBSI's asset allocation, which is shown on screen, shows that the trust is well diversified. It also shows that SBSI's investments are split into three broad areas, which are long-term investments in nature. We'll run you through these areas, but we will link to a previous KTI research note in the description, which provides a better and more in-depth overview. Broadly, debt and equity for social enterprises is where SBSI provides capital to social enterprises through secured lending, charity bonds, and funds investing in established enterprises. High impact housing is where SBSI invests in social and affordable housing funds, which buy or develop high quality affordable housing for high need groups. Social outcomes contracts represent services that are contracted out by the government to cater to specialist social needs. And finally, liquidity assets are more liquid products such as sustainable bond funds, renewable energy investment trusts, and money market funds. The part of the portfolio that is invested here is capital that is committed to projects but not yet required and is designed to limit cash drag. During its most recent financial year, which ended on the 30th of June 2024, SBSI saw its net asset value increase by 1.5% on a total return basis. The biggest positive to performance was investment income, which added 4p per share to NAV and was supported by higher rental income as a result of its inflation linkage. SBSI saw some positive valuation gains in the 12 months, notably through capital returns from social outcome contracts. However, these were not enough to offset valuation write-downs elsewhere, and overall revaluations detracted 1.49p per share from NAV. Our analysts believe that the recent results show the resilience of SBSI's portfolio, with the managers weathering a very challenging economic period and still delivering positive NAV total returns, as well as improving the trust's income profile. The NAV has returned 2.74% per year since SBSI was launched in December 2020, despite a fall in the share price of 3.7% per year. Now, while SBSI has an objective to provide capital growth, it also offers investors an attractive and well-backed income stream. SBSI benefits from reliably backed income sources, including the government. Our analysts believe that these revenue streams mean the dividend outlook for the trust continues to look strong and contributed to a 28% growth in the dividend this year. The dividend for the 12 months to the 30th of June 2024 was 2.94p per share, representing a yield of just under 4%, based on the share price of 74.35p at the time of recording. The dividend guidance is for between 2 to 3% of NAV, and therefore SBSI is at the top end of its range. The positive factors we've mentioned so far in terms of NAV performance and the dividend haven't yet been reflected in the Trust's current rating, in our opinion. The share price is down 29.8% since IPO at the time of recording, leaving SBSI on a wide discount of 28.3%. We understand the board is exploring multiple options for how to rectify this and has been undertaking share buybacks over the financial year and in the period beyond, which have been accretive to NAV. Our analysts believe that this current level of discount could present an attractive entry point for long-term investors, while also enabling them to invest in a portfolio that has shown good resilience and generated differentiated and highly defensive income. SBSI is allowed to be up to 20% geared, although this allowance hasn't been used by the Trust thus far, and the managers have indicated that this would only be used for temporary short-term funding, where investment opportunities are compelling from both financial and impact perspectives. SBSI's current ongoing charge is 1.37%, which compares to a weighted average 0.9% for the flexible investment sector, according to JP Morgan Cazenove. The OCF includes a management fee of 0.8%, which is paid equally between BSC and Schroders and is not charged on the portion of the Trust allocated to liquidity assets. We think that SBSI offers investors an opportunity to access a unique portfolio of private assets selected by a specialist team that can provide a meaningful impact on the lives of those otherwise underserved, while aiming to generate a robust financial return for doing so. You can find more information on the SBSI website, which we'll link to in the video description, and don't forget to check out our research notes and the latest results analysis on the KTI website. Thanks for joining us today, and we hope to see you soon.
Past performance is not a reliable indicator of future results. The value of investments can fall as well as rise, and you may get back less than you invested when you decide to sell your investments. It is strongly recommended that if you are a private investor, independent financial advice should be taken before making any investment or financial decision. Please be aware that there can be a time lag when we release these videos, meaning time-sensitive information may no longer be accurate at the time of publication. Kepler Partners LLP has a relationship with some of the companies covered in this video, which may impair its objectivity. Kepler Partners LLP is authorized and regulated by the Financial Conduct Authority.